This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a fresh new week, Monday morning, bright and early. Not bright, really. It's a little dark and cloudy outside.
At least it's not pouring, Prashant.
It's not pouring, but the weather is beautiful. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia, and we have Surabhi with us today over the next 2.5 hours. Guys, hi, morning.
Hi, morning.
guys.
And I think after, 10 days, we finally got to see the sun in Mumbai this weekend, right? Yesterday, it was a bright and sunny day. So hopefully, it'll be a bright and sunny day on Dalal Street as well. But so much to track this week. I mean, we say that every Monday, but, we're in the thick of the earnings season, so lots to track, perhaps.
Yeah, and we're not lying. There is a lot to track.
There is a lot to track. Or maybe just we have a lot on our plate.
I mean, it's
Earnings
packed.
season,
It's
so
packed.
it's a little breathless, but I think, we in the
It's
market's
par for
pretty
the
used to
course.
it, yeah.
All right, well, let's start the the run here over the next 2.5 hours because there is so much to track. Okay, this is what you need to know as we begin another trading session. And it's positive. I'll tell you why. On Friday, to begin with, where we left off, Nifty and the Nifty Bank took support at the 20-day moving average. The 20-day moving average is an important line in the sand between turning bullish and flipping towards the bearish side. We hit the 20-day moving average. In one case, breached the 20-day moving average, but closed above it. So that's point number one. Now, keep that in mind. I'll come back to the levels a little bit. What is the handoff from Wall Street? And this is important. Remember, this is important because on Thursday, we had U.S. markets which sold off aggressively from 52-week highs. You had 2.5% reversals on Thursday. So there was no follow-through on Friday, and that's why it's important. Nasdaq was up 1.9%. The S&P was up about 1% as well. The data backdrop, I think, is what is giving more confidence to bulls this morning. So data points to a Goldilocks scenario, not too hot, not too soft. And if you want to talk about the U.S. economy, a perfect soft landing. I mean, there is nothing called a perfect soft landing, but so far, I mean, data indicates that it is going to be what the Fed really wants. A soft landing, which is not too disruptive. And this is the reason why. This is the latest three data points. We have on the inflation front, we have the core PCE and the employment cost index, the ECI number. Both are tracked by the Fed closely. Both of them indicated that that inflation is continuing to soften. On the other hand, you had personal spending data, which shows that consumer is in a pretty healthy shape. So, inflation is off, consumer spending is pretty good. That's essentially the Goldilocks for you, or at least that's the way it seems. And this is what markets in the US responded to as well. Let's just come back and kind of circle back to levels here. So as I said, the Nifty took support of the 20-day moving average. That number is 19,577. We basically bounced 70 points off it. So the support for the Nifty as we start another trading session becomes that exact 20-day, which is 19,577. That's got to hold. On the upside, I mean, we got to almost 20,000. So the markers are set on the upside. We just first need to find stability and then perhaps start another move higher. Bank Nifty took support of the 20-day moving average at 45,368. By the way, also on the Nifty Bank, it also got to the 61.8% retracement of the recent rise, which stands at 45,244. So in the case of Nifty Bank, yes, the 20-day is important, but the bigger level here is the 61.8%, and that's the 45,244. That comes under the 20-day moving average for the Nifty Bank. So that's the basic broad setup that one is working with. I mean, I would say looking at the reversal in the U.S., the data that we saw out of the U.S. on Friday, and the general setup here, still the enthusiasm in the broader markets, etc., I would kind of hesitate to say that this is done, or this is stalling, or we're starting to see a big one on the downside or anything of that sort. You want to maybe give it a day, 2 days, you could do that, but I would say, this is far from done on the upside. The point, though, is that because the market's done so well so quickly, I mean, you could expect some pullback, some sideways action. That is always the case. But otherwise, I don't think there's very much by way of big trouble ahead. 56 odd point higher is what the Nifty GIFT Nifty is indicating in terms of a start. Sonia.
Oh, absolutely. And it's expected to be a good start, right? Let's not forget that it's now been 6 trading sessions since the Nifty made its last full-fledged attempt to get to that 20,000 mark. So not only haven't we seen the sun for 10 days, we haven't even seen that attempt towards 20,000 for the last 6-7 trading sessions. But let's see, this week could be the week. The markets definitely have, they are optimistic and there is an uptrend that's intact. The strong global cues is something that could aid the sentiment this morning. Remember, the Nifty has been in that range of 19,400 to 19,800. Do we get past that range convincingly this week? Time will tell. There are many cues to watch. But there was a large FI selling on Friday, so just keep that in mind. There was a net sell figure of over 1,000 crores that we saw from the FIs on Friday, but DIs bought little more than that, about 1,600 crores or so. And, for the US markets as well, Prashant was speaking about the softer inflation data. That has led to a third week of gains for the Dow, fifth week of gains for the Nasdaq. In fact, the Nasdaq has now put in almost 4% of a rally in the month of July. So July has turned out to be a really good month for the global markets. Will that translate into our markets moving higher? It could, given the kind of cues that we have. And as Prashant was also pointing out, on Friday, the June data for the US personal consumption expenditure price index continued to show easing inflation. So that's the big thing to watch out for. For our own markets, you have the auto sales that come out for the month of July tomorrow. And this time it's been a slower growth for pockets like passenger vehicles and two-wheelers. In fact, for the small car segment, demand has been weak. Discounts have gone up and there is moderation in growth. So that's something you need to keep on your radar. And lots of big earnings this week. Starting today, you have Maruti. Tomorrow, you have Ambuja Cements. There's Titan. On Thursday, there's Bharti, Dabur, Eicher Motors. And then on Friday, you wrap it up with Mahindra & Mahindra. So a lot of Nifty components will be announcing their numbers this week. So we've pretty much got our hands full in terms of data. But there are a lot of other cues across Asia that are perhaps indicating some caution in the system as well?
Well, actually, the cues are now indicating a lot of bullishness because the numbers are cautious. And I'm talking about the Chinese PMI numbers. There's contraction on the manufacturing side. For the 4th consecutive month, the July PMI has contracted. And by the way, these are official manufacturing numbers from China. So the number came in at 49.3, slight improvement from June, but still a contraction. Not just manufacturing, the non-manufacturing official Chinese PMI is at the lowest in the last 1 year. So that's weak data, but that's making markets extremely buoyant and optimistic. If you look at the Hang Seng, for instance, it's up about 2% on hopes of more stimulus. So weak data, ends up being a positive read-through for market these days. And that's what's happened. You guys have discussed the US inflation print, so I won't get into that. By the way, interesting reaction continuing on both the yields and the dollar. The dollar obviously was a little whipsawed all over the place because of the BOJ policy that came out on Friday. So that's the year-on-year picture for core PCE 4.1, which was a little lower than the 4.2. That was the estimated print. And therefore, the markets took that very well. The dollar has been very, very range-bound. Yields, the US 10-year, by the way, is inching back to the 4% mark. It cooled off after that inflation number came in, but then kind of rose again. The dollar index has been in a range. We're closer to 102 today as we're looking at it. Speaking of earnings season, and this is the most positive cue for the global setup, which is why perhaps Prashant was also saying that he wouldn't jump into reading that this rally is over and done. Because look at the strength of earnings. Almost half of the S&P 500 has reported, and 79% of those companies, about 250 companies, they've actually beaten estimates. And that's a better stat than what we have for our results season here. Prashant was, of course, alluding to that earlier on Friday as well, how we're still seeing a lot of downgrades in India. And that story continued over the weekend. Just a quick run through. SBI card, yields are declining, margins are declining. The average spend per card is declining, so it doesn't inspire much confidence. On DCB, there's higher slippages, NIMs are contracting. Marico was probably the brightest spark over the weekend earnings that we had, and we'll tell you why in our top 10 segment in just a bit. NTPC, it was a lackluster show, revenues were down, lower generation. So short point, no outlier, positive, big surprise, earnings surprise coming in. Today's a heavy day. Maruti for sure, but then there is Power Grid, there's Bosch, On GAIL, by the way, there's a surprise double upgrade coming in from a foreign brokerage ahead of the numbers, so we'll watch out for that. A couple of interesting mid-caps, Oberoi Realty, Petronet. So it, as Sonia said, promises to be a busy, busy day ahead.
I just couldn't catch all of that. So in the break, maybe you can give me another refresh of all the stocks that I need to watch today. But plenty happening.
Oh yeah, plenty happening. And let's just quickly give you a preview of what you need to know over the next 30 minutes or so. First half hour, we'll get you updates from across the globe. We have Foo Kien Yap of Standard Chartered Bank who will join us to discuss the setup. We have our research team get you the top 10 stocks for the day. And we'll do a fundamental stock analysis with our expert, Prakash Diwan, who will be with us at about 8:30 as well.
Okay, well, let's begin the week with commentary coming in from one of the best and brightest minds in the business, Chetan Seth of Nomura, who says that he remains tactically positive on stocks. He believes the recent positive momentum in stocks can continue with many supportive factors still in place. Firstly, he says the Bank of Japan and Fed events are now behind us, easing concerns about the risk of a hawkish outturn. He adds, although the Bank of Japan did surprise the market with a hawkish change in its YCC policy, he does not think the change in the policy itself will have a sustained negative follow-through in Asia ex-Japan stocks.
Okay, well, let's get you some money market views as well. This is B. Prasanna of ICICI Bank, who says that the dollar remained well supported by strong U.S. activity data and a dovish ECB, while the yuan recovered with improved risk sentiment in China on the back on news of economic stimulus. He says rising crude oil prices, a pause in inflows and renewed dollar strength weakened the rupee, which earlier faced strong resistance from the Reserve Bank of India intervention against inflows. He adds U.S. non-farm payrolls data, which is going to come out this week, will further give cues to the rupee, even as it is expected to trade between 82 to 82.6 to a dollar.
Okay, and on the bonds, here's what you can expect. Prasanna says global yields hardened with a steepening bias as participants reduced expectations of a faster rate cut post the pivot, owing to continued strong data prints and strong labor markets. He says the Bank of Japan turning out to be hawkish at the margin also took global yields higher. He says local yields mirrored the move, breaking out of the tight range that has been following for some time now. He expects markets to remain marginally under pressure as the MPC meets next week and expects the 10-year benchmark bond yield to trade in a range of 7.1 to 7.25%.
Okay, and as always, we have lots of stocks to track today. So today, in our top 10 segment, we will be looking at Marico, IDFC First Bank, Star Health, MCX, RVNL, and Siemens. Those are on the back of positive news flow. Meanwhile, NTPC, SBI Card, Piramal Enterprises, and United Breweries are stocks on the radar, which could possibly open in the red.